Hello and welcome to episode 12 of our tax update series. I'm Andy Rainford, Chartered Tax Advisor and Editor here at Tax Essentials for Advisors. We're into autumn, my favourite time of year. At least it would be if I wasn't having to spend £100 a month on firewood to heat the cottage. But on the plus side, it means jacket potatoes cooking in the embers. And who could feel down about that? This week, the Welsh tourist tax moves a step closer. HMRC have resumed raiding bank accounts to collect tax debts, and the old question of what is a reasonable excuse is looked at again. The Welsh visitor levy has moved a step closer, as the legislation has received royal assent. The law will allow local councils to charge up to £1.30 per person per night for stays in the local area. This will apply to all visitor accommodation where a charge is made to stay overnight. Everything from campsite pitches to the swankiest hotels will be required to register, even if the council chooses not to introduce the charge. A new tool for helping determine whether or not qualifying research and development is being carried on has been launched. The tool runs through a series of questions and produces an answer. HMRC says that where the tool is used and the answers given are factually correct, the result can assist with a future inquiry, so should be saved and filed. It is finally possible to opt out of self-assessment and pay the high-income child benefit charge via pay as you earn. Previously, a coding adjustment could be made, but the liability had to be reported on a tax return. As long as there is no other reason a return needs to be filed, taxpayers can use the new service instead. Check out the link shown here. Direct recovery of debt, that is where HMRC dip into your bank account to recover unpaid tax, has resumed. The practice, which started in 2015, was paused during the coronavirus pandemic. However, it has resumed for a test period. There are a number of protections and safeguards in place, including the guarantee of a face-to-face meeting before the power is used. So on to cases. And the first one is around reasonable excuses in the context of filing a tax return late. Here the taxpayer was issued with a notice to file 2 returns, but didn't do so until they were more than 4 years late. She claimed that she had attempted to file electronically but couldn't, and had asked an accountant who was also unable to file the returns. The evidence showed that she hadn't actually appointed an accountant until 2022. The fact she found the process difficult was not a reasonable excuse, and the penalties for late filing were upheld. In this next case, the taxpayers purchased a house with an annex and made a claim for the now-defunct multiple dwellings relief. HMRC said that as there was a hallway that could be accessed from both areas, the property was a single dwelling. The tribunal disagreed and said that the correct test was to look at both areas and consider whether the annex was suitable for use as a dwelling in its own right. It had a separate entrance, its own electric supply and fuse box, and suitable washing and cooking facilities. It was suitable for use as a dwelling, and the appeal was allowed. And that's it for this week's update. I'm delighted to announce that our new sister series of VAT updates have now started. You can view the first one via the media section of the Tax Essentials for Advisors site and on our YouTube channel. Next time, I'll be giving details about our next webinar, which will take place in November, where I'll be joined by VAT expert Neil Warren. Until then, from me, Andy Rainford, it's goodbye for now.